Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. So it seems some activity is returning back on the euro currency. As you can see, performance stands to the upside in the short-term charts and daily and intraday charts. So currently it seems that we need to turn to the second scenario that we discussed with a bit deeper retracement. So in general, yes, the performance was nice. Market was showing and has shown nice reaction on the XOP target that we have specified, but later the upward action has continued. And currently, personally, I do not see big reasons for that. I have checked for news, but haven't found anything that could explain this upward action in euro currency right now. So maybe you know more. In this case, just put the post on the forum to explain the background. But since we do not have some breaking news, it seems that this might be the just compounding reaction on all markets across the board. If we'll take a look at the interest rates once again on the dollar index, we will see also some pullback. But at the same time, I do not see really big reasons to be happy in the European Union, is because if we'll take a look at the recent headline, you could see that actually German inflation, they're speaking about the producer price index, has jumped on the highest rate since 1949. And if you remember, 3 weeks ago we said, when we have analyzing the statistics on the European Union level performance of the economy, some important data, we said that probably European Union economy should start preparing for 50s. And actually, this is the first bell that we see from the PPI numbers. And as closer to the May or in the early June, it will be more evident that situation is deteriorating really fast. So the reason why currently we see rally on the euro currency, well, it looks a bit curious, just because there's no big reasons for that, and except maybe some technical performance of the other markets as first moment, or it might suggest that in the United States the situation stands even worse. So we will see, but we have upward action on the lower time frame, and we intend to keep going with it. Speaking on the other markets, as I said, if you take a look at 10-year yield, you could see some pullback. This is daily chart recently, so it's some kind of the reversal bar on the daily, and it means that maybe market should show a bit deeper retracement. It's just because, well, it's absolutely reasonable in this situation. It's just because market is too overextended, it's really overextended. So we already saw that. I have shown you the monthly chart and weekly chart where the exceptional overbought area, where rates right now stand. So they are just need to relax a bit and to out some steam from the pot, and that's absolutely normal. So the same story on the dollar index. So you can see here is also, we could see some of the pullback, but we will see what it will be, whether it will be also minor pullback or maybe something greater. Anyway, on the euro currency, it means that we're going with our next scenario. So here we have the divergence. Actually, guys, speaking purely on a divergence, I'm not sure that's definitely reliable. It's just because I have explained last time we're not at some strong support area. But divergence itself suggests that market should move above the extreme point between the bottoms. So divergence suggests that this might be action somewhere above this area. We will see. Currently it's too early to speak about it, but who knows. We intend to go step by step. First of all, if market will close somewhere in this area, today is Thursday already, by the end of the week we could get bullish engulfing pattern on the weekly chart. That suggests kind of the ABCD action to the upside. This is perfectly corresponds with the pattern that we have discussed on the 4-hour time frame chart. Now we have here also some minor divergence with this recent downward action, and here's really great performance to the upside. Nearest resistance is 109.20, 109.40. It's some kind of the confluence. but this is really very minor reaction point. So I would treat it more as just fib level, 30% from this downward action. And this level, as you understand, is very important to us. It's just because this is potential neckline of the hand and shoulders pattern that we have discussed. So we said recently, if you would like to go long, wait at least for some more or less significant pattern. One of them might be these larger hand and shoulders. So we're coming to a very important part of this pattern. So once market hits the neckline, starting to form right arm, that will be the moment of the decision making. If you'd like to buy, this will be ultimate and perfect point. It's just because it provides you least risk, and here you could control easy the pattern itself. Just because minor signs of the failure moving down, that explains everything that head and shoulders is failing. So that's why the bottom of the right arm is very useful and practically actually perfect area to take the position. On the hourly chart, what we have here, guys, where we have now B point, it was our XOP recently. If you remember yesterday we talked, if you would like to go short, at least consider the XOPs, just because this is the, if you remember, we have the channel here, and I said this will be the upper border of the channel, so at least here you could consider the points where you could theoretically think about taking short position. So you can see market challenged it for 2 times. Every time pullback was more or less solid and more than enough to move stops to the break-even in general. This scenario also has shown at least some reaction on the market. And now, since market already is moving higher of the all minor patterns, I mean this A, B, C, D pattern, this A, B, C, D pattern, so market already stands above the XOPs. And we use here this bit more extended, this A, B, C bottom. So actually we need to draw it in this way, but I'm just moved this line right there, just it looks a bit better. So OP here stands precisely at the neckline, as you can see. Solid acceleration here suggests that this target should be completed. It's a very fast CD leg we have. And as you can see, OP actually makes the agreement with the confidence resistance. So for scalp traders, this is the point where you could consider taking the short position. This once again lets you to place very tight stop just above the confidence. Potential target will be the bottom of the right arm. It's around 108.30, 108.40 approximately. Well, not really bad combination for 80 pips downward action. So that's for bearish traders, for scalp traders. If you would like to go long, as we said, then we're just waiting when the market starts forming head and shoulders and watching for reaching of the support around right arm. Then we consider whether it makes sense to take position or not. Of course, if we will get the sell-off, something of this sort, hardly we will agree to buy your currency. So that's our view on euro. Let's keep going with this.